Welcome back everybody to VTS Options. So in this video, I'm going to show you an option strategy that can make you money whether the stock or index you're trading goes up or down. Now that might sound too good to be true. That's the holy grail of investing, making money in any market environment. But the Iron Condor option strategy is way more than just a cool sounding name. And just a side note, one of the first websites I had over 10 years ago was called theironcondor.com. So I've been using these successfully for a very long time now. Today I'll explain what it is, why we use them, and then I'll show you a real trade example and execute it live so you can see opening to closing why successful option traders love Iron Condors so much. And if you are ready to dive much deeper into the world of Iron Condors, this video today is just part 1 of a 25-part video series breaking down all aspects of this awesome trade. The course is free for all current VTS members, so now would be a really good time to join so you can progress through it and participate in all the content. There's a link in the description down below. Just go to my website and join the VTS community. You're always welcome anytime. Alright, so here we are inside the Thinkorswim platform, and we're looking at the SPY ETF. This is the S&P 500 in 2022. Now, it's been a pretty awful year for the stock market, we can see that here, but recently it has started to recover a little bit. Now, everybody's going to have their gut feeling, but I know for me, I could definitely see this recovery continuing a little bit. But on the flip side, there's a lot of bad news out there, and I could also see it reversing and going back down. Right now is a time where I feel very comfortable saying I don't really know which direction we're going to go, but what if we could set up an options trade that would profit whether it goes up or down? We'd really be onto something, and that's what the Iron Condor is. So here we have a basic axis with price on the horizontal, profit on the vertical, and we've got stock XYZ currently trading at $100. Now remember, we don't know whether it's going to go up or down, so we want to cover a future price range above and below the current price. Now at some point in your options journey, you've probably heard of basic put and call options, both long and short. They're the basic building blocks of options, and they can be used to take any directional bias you want. Now, if you're not familiar, I've got individual videos on the YouTube channel for all 4 of those basic option legs, so make sure you check those out. But we don't want any directional bias here, so we're actually going to use all 4 of those options at the same time. Now, don't worry, this can all be done in a single click transaction, so it's just as easy as any other trade. Trust me, anybody from any background can do this. But here's what the Iron Condor looks like. It's constructed by simultaneously selling a short put and call option closer to the current price, and then also buying a further out of the money long put and call options for protection. Because those further out of the money puts and calls are part of the trade structure, again, this is all done in a single transaction, it does mean that the maximum loss is capped. And we know ahead of time what we can make or lose, which makes risk management much easier. You can see though, the trade kind of looks like a bird with its wide wings, hence the name Iron Condor. Profit is made if the price of the underlying security remains in this middle range. We've got the break-even points, which if you set it up at the right time, they can be considerably wide. And then you start to take losses if it deviates too far in either direction. Now, just so you can see what's happening here, this is the original S&P 500 chart we looked at before. And now you can imagine that Iron Condor chart flipped on its side. We're hoping the price stays within this range. Remember, there is no reward without risk, and that's the trade-off here. We don't care whether the price goes up or down. We can profit from either. But if it deviates too far in either direction, that's when a stop loss would be useful, which I do use in my own trading. Trust me, you'll understand the Iron Condor perfectly in a few minutes here when I go through an actual trade example. But first, let's just touch on the option Greeks really quick because they are important. The Greeks are statistical values that provide us a way to measure the sensitivity of an option's value with respect to other factors. We have price, time, and volatility. Delta is an option sensitivity to price, and Iron Condors are delta neutral, which is what we've been talking about. We are indifferent to direction here. Up or down is fine. We just don't want it to trend too strongly in either direction. Theta is an option sensitivity to time. Iron Condors are theta positive, which means they gain value with the passage of time. Every day that goes by, that contract does decay a little bit, and that works to the advantage of the trader. And lastly, Vega is an option sensitivity to volatility. Iron Condors are Vega negative, which means they benefit from decreases in volatility. I'll get into this next in a real-world example, but Iron Condors are best open during times of higher volatility. And since we have high volatility, the Iron Condor is the perfect trade for this situation. We can set up a pretty wide profit range over here that is going to capture the fact that the higher probability is that not a whole lot in either direction happens. So as far as opening it, we'll go to the Analyze tab here, and you can see all the option expirations are listed here. Now for me personally, I like to do them about 40 to 70 days to expiration. So this one, the 19th of August 2022, 53 days to expiration, this one will work just fine. So I'll scroll down to the at the money. You can see the SPY is currently trading around 389. So I will just go here, sell to open an Iron Condor. And remember, this is all done in a single transaction, so it's very easy to open and close. This is what that looks like. Now, of course, it's a tiny sliver here. This isn't our final trade. We have to widen these wings out to create the Iron Condor. Now, there's a few ways people do this. It's usually based on preference and experience, but one pretty easy way to do it is the option Greek delta can also be viewed as a probability. So that's sort of beyond the scope of this video, but I'm just going to choose a roughly 20 delta up and down from the current price. So this is the put side over here. We can see the 20 delta, and I'll just go a little bit higher there to this 360 strike. So I will change this to the 360. This is the out of the money put, and then go $5 further out of the money to make sure that we cap those losses. And then on the high side, we can do the very same thing. We can look for that delta column right here, and we can see the 20 delta is at 419. I'll just go out to this 420 for this example, and I will adjust my call option right there to 420 and then $5 further out of the money. And now this is what our Iron Condor looks like. This is the familiar shape. So I'll just adjust these break-even points so we can see the trade a little better here. The current price is right there in the middle, and this is capturing that middle ground of potential prices on the SPY. If it goes up 6 or 7%, we're okay. If it goes down, we're going to be okay. We just want it to move sort of in that price range above or below this line right here to catch our profit. Nothing raging higher, nothing absolutely crashing lower, and we're going to be just fine. We can check out the Greeks really quickly. Remember, the first one was delta, and you can see we are basically right there at zero. This is a delta neutral trade. As far as price movement goes, we don't care which direction this goes. Theta is the next one, and remember, these are theta positive. You can see it $2 there. Now, we haven't adjusted the strike contracts, so that doesn't sound like very much, but being theta positive means that we do have time on our side, and we can make a little bit of money as each day goes by. And lastly, Vega. Remember, Iron Condors are Vega negative, and you can see it here. This is why you ideally want to open them during higher periods of volatility, which of course we have now because it's been quite a remarkable crash in 2022. So this is our trade that we are looking at. Now, all we have to do is just adjust the number of contracts and then execute the trade. So for me, as a good ballpark for allocation size, I think that 2% of your net liquidation value of the account usually gets you pretty close to the ideal allocation. So this account here, this is the one we use for live streams, 250,000 give or take. We're looking to allocate $5,000. Now, if this contract is trading around $1.70 premium, the strike gap is $5. That means the maximum loss is about $330 per contract. So you just take 5,000 divided by 330, and that's how many contracts you open. In this case, it's going to be 15 contracts. So I will just adjust that, and this is what the trade looks like. Same exact shape, we just added some more contracts. And since everything looks good now, the only thing that's left is to actually execute this. So if I go to the trade tab, enter the SPY here, find the expiration that we are trading, which is this one 53 days out, and we are just going to do the exact same Iron Condor we just set up, but this time it's going to be a live trade. So first I will adjust this to 15 contracts. Remember, we said the high call is 420, and we said that $5 strike gap is what we are going to be targeting. And then the low one was the 360 strike with, again, $5 strike gap. So this is what we would say a 360, 420 Iron Condor. Now, as far as executing these, you can see there's 3 or 4 cents difference here with the bid ask. So ordinarily, I will target something around the mid price. It says 169, 170. Let's just go 171 and go ahead and try that. We're probably going to have to adjust it. But again, this is very fast. If I'm not doing a video, I could have done this all in 30 seconds, but I'm kind of taking my time here. So you can just make sure that your maximum loss, everything checks out here. You don't want to fat finger something. You can see the buying power effect, 4,974. That's the 5,000 we are trying to spend here. So everything's good. We're just going to send it. Now, the next step, on your software, it'll probably be very similar. It won't look exactly the same. But you can see here, I'm trying to get $1.71, and the price is only $1.70. So I'm going to have to drop mine a little bit. Again, this is super fast if I'm not making a video, but I could just drop this a couple of cents and go ahead and do that and see if I get that price. And there you go, it executed. Now again, if I'm not actually making a video, more than likely I would have done $1.70 and maybe waited 10 or 15 seconds, but it doesn't really matter. This is just an example. So now this is the live trade down here and it looks exactly the same. The final thing that I like to do is I just like to mark my stop loss just so I can see it visually every day that I log into my software. So if I do 50% of the premium that I brought in, $1.70 divided by 2, 85 cents times the 15 contracts times $100 because of course one option contract is 100 shares of the underlying, and my stop loss is about $12.75. So I can actually just mark those on here like this, something close to that. Now every day that I log in, I can just make sure that as long as the price is within my stop loss, I'm just going to let the trade go. As far as a stop gain, when I collect 85 cents, I'm going to know to take it, close out the trade, and look to open a new one with fresh capital. That is an Iron Condor that's going to capture future prices over here. And again, I could have done that all inside a minute if it wasn't a video. Iron Condors are very easy to trade, but it is a very useful tool in situations like this where we really don't know where the prices are going. Alright, so through the magic of editing, I'm back here a couple of weeks later, and I just wanted to give the final update on this trade and close it down. Now remember, I typically do a 50% stop loss, stop gain. In this case, it was a successful trade, and I can go ahead and close it out for the profit now. So I'll just go ahead and go into the monitor tab, find the trade, highlight it all here. This is the one right here, the 19th of August, and I'm just going to go ahead and create a closing order. Now, as far as Iron Condor pricing, because there is 4 legs, of course, it's not always easy to get the exact mid price. You can see buying it back for 90 cents, the natural is up to 93. But the first thing I always do is try to get a price that I probably won't get, but you never know. So I'm going to go ahead and try to click 90 cents and just close it down. Remember, when you're buying back an Iron Condor, of course, you want to pay as little as possible. Now, again, it's 4 legs. I'm probably not going to get it, but I would wait 30 seconds and then just adjust the price each time until this executes. So I'm going to go ahead and go up to 91, pay another penny, see if that goes through. And it did, so there you go. The trade is now closed down, and I can take that capital with the profit I just made, and I can move on and try to find a new target, probably on the S&P 500. I would likely just choose the next expiration and do this all over again. Now, if you didn't understand all of that, or you have a lot of follow-up questions, don't worry. That's exactly what the 25-part Iron Condor series that I'm putting together for VTS subscribers is actually for. I'm going to unpack every stage of that trade along the way. So like I said, now would be a good time to join the VTS community. But hopefully now you understand why the Iron Condor is such a powerful trade. And one of our strategies here is called the VTS Iron Condors. It's been in the portfolio for 10 of the 11 years since I launched VTS back in January 2012. Just to recap, Iron Condors are delta neutral, which means we can profit whether the underlying goes up or down. They're theta positive, which uses time decay to our advantage, and they're Vega negative, which means they're really great trades to diversify a portfolio in times of higher volatility and more market uncertainty. And lastly, they are defined risk trades, which means we always know how much capital we have at risk. Stock trading can be very binary. You're either long or you're short. But options trading opens up a world of possibilities and allows us to actually profit from the lack of market movement. I personally believe that all investors out there should have a portion of their portfolio dedicated to market neutral option strategies, and the Iron Condor is the perfect tool for that job. Thanks for watching. So for an extensive volatility metrics dashboard updated daily, and to see all of the live trades for our tactical rotation and option strategies, click this link right here and claim your free trial to the VTS community. You're always welcome to join us anytime. See you next time.